Well, good day, smart traders. I trust each and every one of you are ready for another profitable day within the markets. Let's kick things off by having a look at today's economic calendar.
Today's calendar features two highly anticipated events: the final GDP quarter-on-quarter report and the US unemployment claims report, both of which are set to be released simultaneously at 2:30 p.m. SAST. But before we dive into the details, don't forget to participate in our limited edition branded mug giveaway by liking this video, commenting on what traders use to limit potential losses: A. Stop loss orders, B. Technical analysis, or C. A margin call, and subscribing to our channel. We'll be announcing the winner once we reach 300 subscribers, so make sure to read the T's and C's.
Let's move on by having a look at what's making headlines within the financial markets today.
Moving on to currency news, the dollar has been on the rise, gaining against most major peers, including the yen, which has been quite volatile recently due to the approaching end of the Japanese fiscal year. Traders are hopeful that central banks will focus on fighting inflation, and this has been supporting the dollar. Now let's focus on the analysis of the USD-ZAR currency pair, which is currently trading sideways. If the primary support at R18 to the dollar is broken, we could see a sell-off all the way to the next support level at 17.50. However, if we get a close at the 18.15 level, we could see a rally all the way up to the next resistance at 18.50. Turning our attention to Wall Street, US indices posted gains during the regular session as recovering risk sentiment boosted financial and technology companies. The Dow Jones Industrial Average added 1%, the S&P 500 added 1.4%, and the Nasdaq lifted 1.8%. The big tech shares, including Meta, Amazon, Netflix, and Apple, all advanced with gains of more than 1%. Let's shift our focus to the Dow Jones analysis. The US 30 has broken out of the resistance zone at 32,600, and if we get a close above the 32,800 level, we could see a rally all the way up to the next resistance at 33,300. Moving on to commodities, crude oil prices fell despite bullish headlines on US supply demand and Russian production. The US crude benchmark rose nearly 6% between Monday and Tuesday, but crude settled down 76 cents, or 0.9%. The slide in oil came despite government data showing weekly inventories of US crude falling the most in 4 months, indicating a pickup in energy demand ahead of the oncoming summer driving season. Looking at our analysis on crude oil, it's currently just above the support level at $72 a barrel. If we get a close above the $73.50 a barrel level, we could see a rally all the way back up to the next resistance at $77 a barrel. Lastly, let's finish things off with gold. Bullion prices fell as easing fears of a banking crisis sapped the metal of its safe haven demand, while the dollar also recovered amid a resurgence in bets that the Federal Reserve will keep raising interest rates. The yellow metal extended losses into a second consecutive session, pulling back further from the $2,000 level as traders reassess concerns over an imminent economic crisis. Taking a look at our analysis on gold, it's currently at quite a tight spot. If we get a close above the 1968 level, we could see a rally all the way back up to the next high at 1998. However, if we get a close below the 1955 level, we could see gold sell all the way back down to our lower levels at 1935.
So that is it from us here at Smart Online Trader. Should you be interested in any additional services that we offer, kindly get in touch with us or simply click on one of the links in the description below. As always, may the force be with you. Cheers.